You check your credit score app every week thinking you're being financially responsible. But here's the thing that should terrify you. That free app isn't helping you build wealth. It's spying on every financial move you make and selling that data to the highest bidder for massive profits. Those credit card offers flooding your inbox aren't random. They're the result of sophisticated surveillance. Your app knows you spent $200 at Target last Tuesday, that your rent went up, that you're looking at cars online, and they're packaging all of that intimate financial data and selling it to lenders who want to target you with their products. I'm about to expose the real business model behind these free credit score apps and show you how much this convenience is actually costing you. The data harvesting business model. Here's the brutal truth about your credit score app. You're not the customer. You're the product being sold. When you download Credit Karma, Credit Sesame, or any of these apps, you think you're getting a free service. But the moment you link your bank accounts and credit cards, you've just handed over the keys to your entire financial life. These apps don't just see your credit score. They're analyzing your spending patterns, tracking where you shop, estimating your income, and building a detailed profile of your financial behavior. Let me break down exactly how they monetize your data. Every time you check your score, the app is simultaneously updating your financial profile. Spent money at a luxury store? You're flagged as someone who might qualify for premium credit cards. Your rent payment increased? You're marked as someone who might need a personal loan. Looking at mortgage rates online? You're immediately categorized as a home buyer prospect. Then comes the real moneymaker, lead generation. These companies sell your information to lenders as pre-qualified leads, and they're not getting pocket change for it. A single lead can sell for anywhere from $50 to $200, depending on how valuable your financial profile looks. That's right. Every time you open that app, you're potentially generating hundreds of dollars in revenue for them. But here's where it gets really sneaky. The aggressive marketing pipeline that follows isn't coincidence. Once your data is sold, you become part of sophisticated targeting campaigns. That credit card offer that seems perfectly tailored to your situation? It is. The personal loan ad that pops up right after you mention car repairs to a friend? That's your data being weaponized against you. Speaking of weaponized data, let's talk about the VantageScore deception. Most of these free apps give you a VantageScore, not the FICO score that 90% of lenders actually use. So while you're checking a score that's essentially meaningless for most lending decisions, the app is harvesting your real financial data to sell to companies that will use your actual FICO score to approve or deny you. This creates a perfect storm of manipulation. You're getting a fake score that makes you feel informed, while your real financial information is being sold to predatory lenders who know exactly how to target your specific vulnerabilities. If your VantageScore shows you're in the good range, but your FICO is actually lower, you might apply for credit thinking you'll qualify, only to get hit with hard inquiries that damage your real score. The data sharing doesn't stop with credit card companies either. Your information flows to personal loan companies, mortgage brokers, insurance providers, and even retailers who want to target you with financing offers. Each time your data gets passed along, it's another opportunity for companies to profit from your financial information while you get nothing in return except more aggressive marketing. The most insidious part, these apps are feeding your data directly into the predatory lending ecosystem. Payday loan companies, high-interest personal loan providers, and subprime credit card issuers are paying premium prices for leads on people who might be financially vulnerable. Your innocent weekly credit check is literally funding the system designed to trap you in expensive debt. The hidden costs of free services. Now let's calculate what this free service is actually costing you, because the price tag is staggering. The most obvious cost is the constant marketing pressure that leads to unnecessary financial products. When you're bombarded with personalized offers based on your intimate financial data, you're not just getting random ads, you're facing psychological warfare designed to make you spend money you don't have on products you don't need. Here's how the math works against you. Let's say you respond to just one targeted credit card offer per year because it seems perfectly suited to your situation. That card comes with an annual fee of $95, and because it was marketed specifically to your spending patterns, you end up using it more than you planned. The average American carries a balance of $6,194 on their credit cards. At 24.99% APR, which is typical for the cards heavily marketed through these apps, you're paying $549 in interest annually. That's $1,644 per year from just one targeted offer that felt personalized and helpful. But the costs compound quickly. These apps don't just sell your data once, they sell it repeatedly to multiple companies. Identity theft becomes a serious risk when your financial information is being shared across dozens of companies, each with their own security vulnerabilities. The average identity theft victim spends 200 hours and $1,400 resolving the damage. If your data gets compromised through one of these third-party sharing arrangements, you're looking at weeks of unpaid time off work, plus direct costs to fix your credit and financial accounts. Then there's the credit damage from responding to offers that aren't actually good deals. Remember, these companies are paying $50 to $200 for your information as a pre-qualified lead. But pre-qualified doesn't mean approved. When you apply for that perfectly targeted credit card, you might get denied, but still take the hard inquiry hit to your credit score. Multiple hard inquiries can drop your score by 10 to 20 points, which means when you actually need credit for something important like a mortgage, you could be looking at higher interest rates that cost you thousands over the life of the loan. The time cost alone is crushing. Managing the constant stream of unwanted solicitations, phone calls, and mail offers takes hours every month. You'll spend time researching offers that seem good but aren't, calling to opt out of marketing lists that somehow keep finding you anyway, and monitoring your accounts for unauthorized activity from all the data sharing. That's time you could be spending actually improving your financial situation instead of defending against companies trying to profit from your data. But here's the opportunity cost that really hurts. While you're being fed sponsored financial products through these apps, you're missing out on genuinely better options. The credit card that gets heavily marketed to you through data targeting isn't necessarily the best card for your situation. It's the card that pays the highest commission to the app. The personal loan offer that seems tailor-made for your needs might have an interest rate 3 percentage points higher than what you could get by shopping around independently. The apps create a false sense of personalization that actually limits your options. When you think you're getting customized financial advice, you're really getting customized marketing designed to funnel you toward the most profitable products for them, not the best products for you. The right way to monitor your credit. Here's how to actually monitor your credit without turning yourself into a data harvesting goldmine. First, get your real FICO scores directly from sources that aren't selling your information. Most major banks and credit unions now provide free FICO scores to their customers as an actual service, not as bait for data collection. If you bank with Chase, Bank of America, Wells Fargo, or most credit unions, log into your online banking and look for the credit score section. These scores come directly from the credit bureaus and reflect what lenders actually use to make decisions. For your full credit reports, use annualcreditreport.com, the only federally mandated free credit report site. This is run by the credit bureaus themselves under government oversight, so your data isn't being packaged and sold to third parties. You can get one free report from each bureau every year, which means you can check your credit every 4 months by rotating between Experian, Equifax, and TransUnion. Here's a crucial step most people skip: opt out of pre-screened credit offers. Go to optoutprescreen.com or call 1-888-567-8688 to remove yourself from the lists that credit card companies use for those targeted mailings. This single action will dramatically reduce how much of your information gets shared between companies for marketing purposes. Instead of relying on third-party monitoring services that harvest your data, set up fraud alerts directly with the credit bureaus. A fraud alert requires lenders to verify your identity before opening new accounts, and it's free. You only need to place the alert with one bureau. They're required to notify the other two. This gives you real protection without feeding your information into the data broker ecosystem. Create a simple monthly routine that actually protects your privacy while keeping you informed about your credit. Check your bank's free FICO score once a month. Review one of your free annual credit reports every 4 months, and monitor your bank and credit card statements for unauthorized charges. This takes maybe 15 minutes per month and gives you better protection than any app that's mining your data for profit. If you want legitimate credit monitoring, get it through banking relationships where you're actually the customer, not the product. Many credit unions and community banks offer real credit monitoring services as part of their customer benefits. These institutions make money from your deposits and loan interest, not from selling your data to third parties. The monitoring they provide is designed to protect you, not to generate leads for other companies. The key difference is simple. When you're the actual customer paying for a service or banking relationship, the institution has an incentive to protect your interests. When you're using a free app, you're the product being sold, and the app's incentive is to extract maximum value from your data while giving you just enough perceived benefit to keep you engaged.